Same one again. It's been a few months since last time I did a video, but for those who pay attention to my previous video, you know that the stock I recommended you have been very bullish in July. I mean, really, the market has been doing very well. So the biggest concern lately, just to set up the stage of what I'm going through with the other stock, individual stock, it was the unemployment rate that went higher, and also the interest rate has yet to be cut. These were items that drive the market to be actually coming back down after the bullish of July. And also the unemployment rate was higher, which given a little bit concern. But bear in mind that the number was still good, but the student who graduate from college looking for jobs, and the people who have not been working for a while and decide going out to workforce now, these people were not in part of the unemployment number. And the market also have been very hot, but then until the Japan has announced an increase of interest rate, then you flip the position of yen and from 1 to $160 to 1 to 140. And that day, you're driving all the market, and especially high tech at a really hot hit. Nvidia, Netflix, Apple, Amazon, Google all drop over a few percent. So if you ask me, I will always tell you that I would say this: the market always find a skill on profit taking, right? So this is the news coming up. So it's good to really sell it off and take the money, and then with the good news, then you will push it higher again. So with all this, just wanted to explain to you how the individual stock that I will talk about are running lately. The first one is my favorite, which is HYLN. Even this graph you can show here as we're going down, and for past month, which is in August, it actually quite a bit come back with 17%. But in the month of July, is actually having gone up a lot to $2.40 and actually hitting the 52-week high $2.60. So from that point, you can see with the Japanese yen, the interest rate announcing increase, they take a deep step as well. But then after that, they actually earning announcement coming out August the 10th. They came up with pretty good, even though they're still losing money. But comparatively speaking of previous year of 2023, they are in a better position, cut a lot of losses, and also the revenue and sales still on track. So after that, the market kind of react favorably. So it actually from $1.60 the low point, it jumping back down to $2, which is like 20%, right? Coming back, so which is pretty good. And then the next stock I always talk about is Pinduoduo. It's continued to have a strong revenue growth and just recently passed the Chinese Valentine's Day, so I'm confident that as they're going to report the earning, it's just going to be stronger. And the balance sheet position, think about it, they continue to have stronger sales, right? The P ratio is 19, which is not bad. The stock can potentially continue to push up over the 52-week highs. I mean, there's some volatility of this stock, but right now, last couple of days, you have been rebound back from a low of $130 to $145 again. So I look forward to actually break the 52-week highs very shortly. With the momentum continue. So this stock, is pretty good to to consider in the portfolio, right? And then Labor Day is coming, which is having some more travel. I'm always endorsing the travel and entertainment stock, and United Airlines. If you look at it, it was at 1.50 some dollars around June, and you dropped all the way back to $40. So that if you think about the pricing into October Thanksgiving in Canada, then Thanksgiving for November in US, then Christmas time traveling global, people were off. You really still have space to grow and opportunity for this stock to coming back up over $50 in next quarter or so, right? And my prediction is not typically August a little weak, but then you'll pick up in September with the earnings, and then we kind of anticipated that interest rate will be dropped, so we should be in a pretty good shape. I want to share a story with you, but actually before that, let me tell you also the index. So for those people who not a short-term investor and not liking to take too much risk, right? So what I mean by that is I always recommend people to take 20 to 25%. If you have the cap gain for the stock, you walk and take the profit, and then you buy back at the dip. And if you're locked in a store for long term, it's harder to look at return. But right now, this year in particular, the index fund index is very bullish. So I'll give you an example. Dow Jones Industrial Average. When you look at how the starting point, well, this graph doesn't give you a starting point, but it was lower than that. And then you compare to where you are at, which is 41,001 point. It gives you a very good return. And if you're projecting, say, 12% return of this year, then Dow Jones will be probably landed at end of year 42,240, and today we're at 39,685. So technically, it's not really that far off. And for S&P 500, if you look at it, we're at 5,425 today. That's where we closed at. You are currently getting 14.5% return, but at the peak where your 52-week high, which is 5,670, you're actually at 19.5%, and just a month ago, that's where the return you had. So if you project 20% of return this year, then S&P 500 will land still high at this point to 5690. Okay, and then one that people really interested in always like to look at, which is the high-tech industry, which is NASDAQ. If you look at the high end point of 52-week highs 18,671, that's actually give you about 25% return. So if you're gonna be projecting, let's say my return is gonna be 30%, then you will go actually even higher than that at 19,100. That's where we're gonna be in at for the year. Okay. Again, because of the election year, I think they want to make the economy looks good, everything looks great. There's a momentum to continue to go back. At the end, I want to wrap up with a story of these stocks that I'm telling you, like Xinpeng is really a future growth stock, robust, even though they're still losing money and looking at the future opportunity. At one point again, the stock was really high, but then they went down. But obviously they're not making money, right? We're looking at the future on those stocks. That's where I'm coming from. And this is a successful story to share, right? If you look at NVIDIA, NVIDIA have been actually before 1999, it was a penny stock all the way up to 2020. And if you look at the split, right? This is just split to 10 times. So really 1,150 is what you're looking at. Then I'm using that as an example. You are talking about $3.50 to $40 in 2020. Then you really keep growing, and then you dip from $200 to $150 in 2021. Then after that, you take it up to $400 and keep going up to now where you see $1,200. So again, this just to give you a perspective, when the innovation and future succeed, and it takes time to develop, research, have a solid growth, and get there and get the market share, become the leader of the world, right? And that time, it takes time. And once you're taken there, you're taking off, you really can go down 10 times or 20 times, like people will share with you the story at Apple, the story at IBM, even though IBM now kind of look like history. These are, and Amazon, these are really good stories to share. And for the stock I recommend, that I hope in the long run, this is where one of these 4 stocks that I recommend will get to the point will give you 10 or 20% times of return as well. Thank you very much. Hope you like my video.